Welcome back. It's Mary Bartos. We're here to talk with my very friend, dear friend, Randy Williams from TBF Mortgage about the monthly housing update. So let's jump into it, Randy. Let's look and talk about mortgage rates. So what is Mark Zandi telling us right now?
Policymakers now risk committing another policy error, this time by waiting too long to begin cutting interest rates. It is unclear why the Fed officials feel it necessary to take this risk. After all, they've all but achieved their dual mandates of a full employment economy and a low sustainable inflation.
Yeah. And we still don't have the interest rates exactly where we want them, right? They're still higher than the Treasury bill. There's still a lot of things going on. Mm-hmm. And yet Mark Zandi says, hey, look at what's happening. Yeah. So, one of the things that everybody's talking about is what's going to happen in 2024. And I like to talk about what's happened in December of 23 as it relates to what they were expecting to where we are now sitting in February. And what do you think about this?
It's wrong. I mean, I'm just going to tell you, they thought it was going to come down a little earlier than it has. My honest 2 cents in this, Mary, is right now it's actually a little higher. They have gone up. I think they're making one last push for the higher interest rates before they really do start the slashing. It's the common sense.
Yeah. But we're in an election year.
Yep.
Do you think our politicians are going to let this interest rate stay?
They've already said they're not going to. No, and it wouldn't make any sense for them to.
Whether you're blue, purple, red, orange, I don't care.
Yeah.
Everybody wants to be reelected. And
and the banks
want
to project out for years and years and years, and everybody likes stability.
That's
sure.
right.
Yeah,
that's right. So from that perspective, I think all is well. When we look at the economy, one of the things, Randy, that I kind of look at, and they talked about it with Mark Zandi, is unemployment.
Yeah.
I mean, if you look at this slide, it's crazy. In June of 24, they're expecting it to be 4.11. And in December, 4.3. So it's gone up a little bit, but 5% is a magic number, is it not?
That's considered full employment. People don't really understand that, but there's always going to be at least 5% of the population that is transitioning or looking for jobs or coming out of college or all of that. So actually anywhere under 5% is considered full employment.
That's incredible. So we're fully employed. That's great. Why are we still doing this, right? I don't know. Anyway, you and I don't set the policies.
No.
And if we did, it would be like 2% free money. I think. All right. So what is Jacob Chanel telling us?
At least right now, the fundamentals of the economy, despite some hiccups, are doing pretty good. While things are far from perfect, the economy is probably doing better than people want to give it credit for. Yeah, that's true.
Yeah. Totally.
I have several buddies right now that are telling me that they can't hire people. That was not the same 4 years ago. That was not hard for them to hire people. Right now, they are looking and can't expand.
Yeah. No, we can feel their pain.
Yeah.
We've got some open slots. So if you're thinking about a job in Marco Island, Naples, or Fort Myers, please call me. A little commercial.
Yeah.
But just kidding. Well, let's talk about that because, the other thing I hear a lot about is, quite honestly, is that we're going to go into all these foreclosures are going to come back. The henny penny is out there. The sky is falling, and the prices are going to crash.
Yeah, it's not going to happen.
Yeah.
People think foreclosure, and it has such a negative connotation to it. A certain level of foreclosures is healthy. People do get divorced. People do pass away. People do lose jobs, things like that. You're not going to have zero foreclosures, but ours are so far below anything that would ever be concerning right now.
Yeah. And this next slide is kind of interesting when you think about it.
There it is,
from 2017 to 2023, the average number of foreclosures was a little under 600,000.
Yeah, I mean, that's well below what we consider normal.
Right. And the slide before showed us what was happening in those crazy years where they were 2.9 million, 2.8 million in 9 and 10. And now we're at an average. And even in that average of those years, we're well below that this year, or I guess that's 23, 357. So well below 241,000 short. I hear this a lot. prices are going to go down. They're going to crash. I don't know where the analysis is coming from, because when I look and process what all the analysts are saying, we're just not seeing it.
You're hearing the same thing I hear from our clients, because we share a lot of them. But it's not true. Anybody who really knows what they're talking about, we all know interest rates are supposed to come back this year. Everybody has but said it. We all know what's going to come this year. When interest rates go down, the prices are going to continue to increase. We still have inventory problems.
Yeah, maybe, and we'll talk on that locally in a minute here.
Yeah.
So go ahead, and what's Black Knight saying?
The prospect of any kind of near-term surge in foreclosure activity remains low, with start volumes near 40% below pre-pandemic levels.
Wow.
Yeah.
So even new construction isn't going to help us out. No. I mean, it's a little better. We have Taylor Morrison here. Shout out to the Esplanade at the Islands. They're moving their new lots so that they can keep up with it at a pace that they have demand, and they're getting multiple offers on those.
Yep.
So, which is kind of crazy. Let's go on and look then at equity. I love this slide, Randy, because it's probably one of my favorite. Been using it for a long time. 67.4% have either paid off their mortgage or they have at least 50% equity. And then we have 33% with less than 50%. Those are probably new people coming in, or you kind of scaled up to a house and wanted to not put that much money down. But if you're sitting in a house, for some time, if you've come through the unicorn years, as we lovingly refer to them, the end of 20, 21, 22, 23 for that, you've got a lot of equity in your house. Now, what are people doing with that equity? Because some of them want to buy before they sell, right?
Yeah, I mean, obviously we do a ton of bridge loans. People are tapping into that before they're going to tap into their investments and get taxed on it. Things like that. This is a great slide. I look at it too and just go, wow, our housing market is actually incredibly healthy, with people holding a lot of their wealth in equity in their homes.
I love that.
Yeah,
I love that. So if we go on and talk about home prices, everybody wants to know, because I keep hearing the sky is going to fall. When we look back at national averages in 23, it was 5.5% increase. And you look at this slide, even Portland out west, shout out to David Caldwell if you're listening. He's in that market, and it was negative. Nothing is negative when it came through December. And this is the latest report that they've published. I think you said something before we started on air. People are moving back to the cities.
Yeah, I mean, we're becoming way less rural and way more urban. That's been happening for 20 years. Right?
It has, but in the pandemic, people moved away from the cities. But now that, and everybody was going to work virtually for the rest of their life, now businesses are kind of bringing them back in a little bit. Right. But all of these major cities are up. Not all of them, but New York, Miami, LA. Those are three majors.
Economy's good.
Yeah.
Big cities.
Yeah. Detroit.
Hey.
Shout out to my friends in Detroit.
And their sports too. I feel good for that city.
Yeah, it's in a good spot.
I have a lot of investors. Some of the bigger banks that we use are up in Detroit. So,
as he says, Detroit. All right. So, what is Brian Luke saying?
Looking back at the year, 2023 appears to have exceeded average annual income price gains over the past 35 years, which is great. While we're not experiencing double-digit gains seen in the previous 2 years, above-trend growth should be well received considering the rising cost of financing. They balance it. I mean, if the prices were going to come back down, all of a sudden you'd see slashed interest rates. They will balance it.
Yeah. And if the prices come back down, or interest rates come back down, the prices come back down, then they're going to go quickly up, because what comes down has to go up.
It's the best place to put your money right now.
Yeah.
Real estate.
It is.
Hands down.
Yeah. My kids own real estate, and now another one's getting a second piece of real estate.
I'm financing him.
Yeah. So, at the end of the day, real estate is where wealth is made. But, this is your favorite side, Randy, right here.
Yeah.
Percent of annual home appreciation over the last 30 years. Is that incredible or what?
That's why all foreign money comes here. That's why everybody understands real estate in America. Yeah, we see those 4 years there, but we all know what happened there. But if you take a real big,
30 years,
30-year view of it, I mean, look at that.
Yeah. Actually, it's more than 30. I think it's 50. 80 to 23. I can't even
Yeah.
do my math. It's
43.
yeah. Yeah, it's more than 30. Clearly, neither one of us can do math.
Carried the two.
But I do love this slide. You got to look at this slide. Just kind of stop it, pause it, or ask us for it. We'd love to give it to you.
Yeah.
But, everybody wants a crystal ball. I have a lot of people that ask me that every day. So what's going to happen in the future? What does Selma say?
As mortgage rates continue to hover in the 7% range, it will be difficult to convince existing homeowners to move at the current time. You know that.
True.
It's happening.
True.
Nevertheless, as a recent surge in mortgage application data has shown, following a drop in rates, buyers are anxiously waiting to jump back into the market. That means 2024 is likely to show another year of highs.
Yeah.
Yeah.
And I think you have been experiencing some multi-offer situations, right?
Twice in the last week. 4 offers on one property with Tracy, and then another one, another friend of mine. Same thing. We were in really aggressive position and still did not get them. The buyer was just like, if I don't get it there, it's fine. We'll move on.
Yeah.
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 It's still there.
It's there.
Yeah.
It's there. It's not unicorn years there,
No.
but it's there. So this one is one that I love as well because it talks about 24 home price forecasts.
Right.
And if you look at the 7 folks, the analysts, 5.5 from Goldman Sachs and NAR at 1.4 appreciation for this year, 2024, average is 3.2%.
You know what I don't see here?
I don't know what.
Anything red. Anything negative. I mean,
No red.
You can keep it as simple as you want to keep it.
Yeah.
Everybody's projecting positive growth this year.
And 3% over the years is not bad. Remember, when we went back to that one slide, the average over a 43-year average was 4.86.
Right.
So 3% is not bad.
Right.
All right, so let's go and see what happened between December forecast, the original forecast, I guess they were in November.
Yeah.
November 2023 to now, this is probably February numbers. They have all gone up.
I mean, massively exceeded their original predictions. Yeah.
Freddie Mac is pretty much on par with what they were thinking. Same number. And Fannie's just a little, but everybody else has gone up significantly.
Yep.
Yeah. So, Randy, we've talked about this home price expectation survey in the past. It's a nationwide panel of over 100 economists, real estate investment, and market strategists. And interesting enough, what they're saying in that, panel is when you look at 24 through 28, this is all going to exceed pretty, maybe a little bit lower than the last 43 years, but really still solid appreciation.
Yeah, I mean, and Mary, our clientele is mostly not first-time home buyers. Let's be honest.
Right.
Like it's not, and everybody has seen what their houses have done. Like this, they can feel it themselves. Like regardless of what the projections are, and they're all positive and they're all great and exciting. People feel it in their own equity. Like you go list properties and you know what you sold them for a couple years ago,
right,
versus what they're worth now, and you're just like high fiving your clients. Good job.
Yeah. We look like heroes at that point.
Yeah.
When you're in those crazy years, you didn't look like a hero.
Yeah.
You look like a bad one. But let's take it back to reality. You mentioned a first time home buyer. 400,000 is kind of an average in some of our markets here. If you invested in 24 and you held it to 29 with this based on their home price expectation survey, you'd have $83,385 in equity just sitting in your house.
This makes sense to the common person who knows that they have to have a place to live and that their investment is something tangible, something that's always going to have a need for the market. Some people are comfortable with stock markets and investing in things like that, but this is one of those things that every average American should strive to do.
I love that.
Yeah.
And the other thing that's interesting about this is if you were going to rent, you probably would have less in a payment, even with the higher interest rates now at $400,000 than you could get for rent.
Yeah, I mean, obviously stabilizing a mortgage, keeping the payment here, that payment will never change for 10, 12, 13, 14 years. But if you're renting, not only are you not gaining any appreciation in your house, that rent's going to go up. Right. So just the wealth that you will attain and also your monthly costs.
Yeah.
you can manage them.
Yeah, exactly. So, we're at the end of this time, but we'd go remiss if we didn't talk about what's happening here in Southwest Florida.
Sure.
Now, one of the things that is on everybody's mind, and it seems to be our agents' clients are coming back and saying, there's so much inventory. Oh my gosh, my hair's on fire, blah, 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 blah. Well, if you really look at it, this is interesting because I feel like the inventory is actually, months of inventory is actually equal or less in a lot of cases to 2019.
Yeah, I mean, listen, everybody was spoiled, and what do they remember from 2 years ago? 3% interest rates, like out of control sales. That's not reality. That was a blip on the larger projection that is real estate down here. The inventory was so low back then that what you had to do to get a house was not comfortable for most people. So right now, as inventory starts to, it's still below normal, like historically.
Below normal.
So, days on the market, if you price it right, just like we're talking about, if you market it right and price it right, it doesn't sit.
It's going to go.
Yeah, it doesn't sit.
It's going to go. Let's look at that a little bit. So days on market, I have a slide here. Interesting enough. Yes, days on market, this is average, and I wanted to use average versus median, which is a little bit less. But, what can you do with days on market? Is this 56 days on market for Naples and 79 for Marco, which is the highest. But, that's less than 3 months. So if priced well, you're going to get it sold. Now, if it's worth $1 and you price it at $1 billion, it's going to sit there for forever. And unfortunately, that's the case when you're in a second home. Some folks don't really care. They're not really sure if they really want to sell. But the truth of the matter is, if you nail that in the price, because that's, with us, that's the only thing I'm testing.
Well, this probably has to be one of the more frustrating things that you go through on a daily basis, because you remember when it was double days on market than this, right?
You could have a baby in the time it took me to sell a house. So 290 days.
So just trying to tell people like, hey, everything's fine.
Fine.
Everything's okay.
It's fine. And let's talk about price a little bit, because honestly, I hear this a lot.
Yeah.
Prices are coming down. The sky is falling.
Where?
Well, yeah, right. So remember, January and October are our two highest listing months in Southwest Florida. Well, at the end of season, which we're approaching, guess what they do? If they didn't sell it because we didn't get the price right or they wanted it high or whatever, they start improving the price.
Yeah.
So it does look like prices are falling. But this is historic every year, year after year after year. And when we look back at January, year over year, which, this is a slide from last year, last month, it's the same. It's the same or a little up. I mean, honestly, prices are holding tight.
And also, Mary, like, some of the other people down here listing homes right here are not realistic in what they're telling sellers. And that's an issue too, right?
Well, you want to get a great realtor, whether that's us or someone else, because you need somebody that knows how to walk you through this process, because at the end of the day, there's a lot of hiccups that happen. And although good realtors make it look easy, it's not, because, things happen. Yeah, just lots and lots of things. So you want somebody that has experience to help you sell your home. This isn't a plug for that, but, Randy, the question is we always ask, is it time to move? And we always say yes. But at the end of the day, the yes is really yes, because if you need to move for your circumstances, yes, move.
We both talk to the same people, really smart people that are very good with their money. And every single one of them knows that buying right now at the price they want it, they know that if they're getting a mortgage, they know the price, the mortgage will come down, that the payment will come down. But getting it at the price they want right now, you're not going to get it at this price next year.
No,
it's not going to happen.
And people are more negotiable, because when we were in the unicorn years, it was taking the prices. Yes, you had 2 last week that were multis. Yeah. That doesn't happen so much anymore.
High value multi offers too.
Yeah.
Not first time home buyer offers.
Yeah. So if you're, at the end of the day, if you find that property that you love, put an offer in. You never know what those sellers are going to take. Yeah. And I'm not suggesting that the sellers have to take it. It's just we have to start the dance somewhere. Yeah. So if you're loving what you see, And this is where you want to be here in Southwest Florida. We'd love to help you buy or sell. And as always, I'm Mary Bartos with the Bartos Group of Premier Plus.
Randy Williams, TBF Mortgage.
Until next time.